Welcome back, everybody, to 30 and 30. This is day 5 of 30 and 30, and on today's video, guys, we're going to be going over basic technical analysis, understanding market direction, and how to find them entries we're all looking to get. Let's get right into the session. Using a free trading view, we're allowed to have 3 indicators, but for this, ladies and gentlemen, we are going to be focused on market structure, and trend direction. So depending on what time frame you're trading on is depending on where you're going to start your top-down analysis from. I personally always recommend starting it off at the daily and working your way down. Obviously, if you're a swing trader, you're going to be looking at the weekly going down to the daily. But for me, I'm a binary options trader, so I'm just really focused on what's happening on the lower time frames and seeing if we can catch significant moves during, the session that we're trading on. So I would look to see if we're approaching any significant hourly supports or any significant hour resistance. What we're noticing here is we don't really have much currently with price. Price is facing rejection at a previous resistance area. Okay, so price is facing resistance at a potential rejection area currently on the hour, so that's a good thing to note. Now, if it was a resistance area, I'm going to mark it red. Now, you can mark it whatever color you feel that you're going to know what it is. This way, I'll mark it red with a thicker line. That way I know, okay, it's on the higher time frame, and it's going to be my resistance. Now, let's take a look at this entry here that was shared with my students. Now, when looking for potential trades, we want to make sure, one, we're trading with the direction of the trend. If that's with market structure, that's the way you're going to want to trade, is with the trend, with the directional move of the market. And when I looked on this on the daily, I seen price break out of a strong consolidating area, came back, retested this area here, and then started showing strength again. It rejected it and then came back over here, rejected it, showing strength. So now, smaller time frames, we're getting a visual of what that uptrend looks like now. So on the hour, we got our resistance, we got our main resistance, our secondary resistance area right here. Now we have our support turned resistance right here. This is our closest support, but because this area in the past has acted as a resistance, like we could see here, we will highlight and make this notice as a purple line, so that way I know, okay, price has been a support and a resistance at this area. Now, we are going to be looking for our support area. So say this would be our support. This actually, you're going to want to make this your support resistance as well, because we can see here price rejected this, and then when it broke, it respected it. So for a better support area, let's get rid of this. Let's see what we got. Alright, so for our support, we'll go here. It's a good area based off the left from past movement. We could even take it down a little bit. Remember, you don't want to pay too much attention to this and spend too much time on it. If you're having trouble or difficulties finding your support resistance, sometimes what you could do for it to be a little easier is you could just click on the line, because the line just shows you the close of the candle or the closing price. So here we can kind of see it a little bit easier. Okay, this is price supported, this is where price resisted. So right in this area is a nice support turned resistance, which we have marked up. And then right below it, we have another area, which we are going to mark this area up as well, which is also going to be a support turn resistance. Back to back, we have two little areas right next to each other, but it has respected it in the past, so we will respect it as well. Now, let's turn this back to candle. See what we got. So before we get up here, let's take a look in the back real quick, right? Let's take a look at that breakout area on the daily. We can see it on the hourly much better, okay? Now, prices come to this area and worked away from it. So in our minds, we can say, okay, there's a support area potentially here. And then when we look to the left, we can see price reacted at the same area. So we have confirmation of a support here. Now, we also notice that price is rejecting this area here significantly, right? I mean, the rejections goes even as low as here. So we can highlight this red so we know, okay, this is our resistance area on the 1 hour time frame. And look what happens, right? We'll cover the whole thing. We see price action, reject, fail to create a high, and come back down to our previous support area. Now from this support area, what happens? We see back-to-back rejections followed by a bullish engulfing candle at the end of this downtrend. So that could have been confirmation. The bullish engulfing candle could have been confirmation for you to start potentially looking to get in for a buy. But your buy move would only be up to the closest resistance or the next resistance, because we don't have confirmation yet that we're really breaking out. The confirmation doesn't occur until all the way over here when price actually breaks out. Price breaks out. This price closes, this candle here closes above this previous resistance area that we have marked up, and that's been a significant area all throughout this whole time, okay? So now our main focus as traders is going to be to see if price comes back to this area and retest for it to respect. Now I'm going to get rid of this box and we're going to zone in on this area. We notice that momentum to the downside started dying out within these candle movements. So at this point, you're saying, okay, we could potentially get the move to the upside. After you get confirmation, whether it be this bullish engulfing candle that helps you get in, or the back-to-back rejection that helps you get in, you're going to set a buy limit right at that same area or right above it. So if price comes back to that area, you're going to get picked up, your trade's going to activate, and you're going to be in the trade to win it, right? So here we go. We set our buy limit right above this area. Price wicked it a little bit, came back a little bit. Even if you would have got in here, price came back down. And remember, your stop loss is always going to be the previous structure. So this would be this is your structure here. So you're just going to make sure you could even put it below the wick just to be on the safe side. I personally, going for 1 to 2 or I'm sorry, 2 to 1 or 3 to 1 trades. These are beautiful setups. So here you have a perfect 2 to 1. So that means you're risking $1 potentially make $2, or you're risking 10 pips to potentially make 20 pips. So here you would have entered and then the trade goes your way. Now, as far as profit taking areas, we're not sure if price is going to continue to stay bullish and create a new high. So our first profit taking area would be this previous high here. So we take it, our profit, take partials, we move our stop loss to break even, and you could potentially run this for however long you wanted to in the upward direction, as long as you are staying with the trend and moving in that direction, right? Obviously, if price comes back to our entry area, it's going to stop you out. As you see here, price came back, but it found support right above our previous resistance line. So it found support above past resistance, and maybe this could have even been additional confirmation with this wick rejection followed by this wick rejection here, wick rejection here, wick rejection here. Maybe you turn it to a 15-minute time frame, wait for a bullish engulfing candle, and you get in. So similar concept. This would be your new low, so you're going to want to have your stop loss below those wicks, and then you're going for 2 to 1, 3 to 1. So if you go to 2 to 1, your take profit's going to be here. Now, currently, trade is running in profits and well enough where you would move your stop loss to break even and you'd let the trade play out. As the trade moves up and breaks previous resistance areas, then you're going to want to trail your stop loss right below that area. Because if, for example, if this is going to be our higher low right now, we could keep our stop loss right here. But if this area becomes our higher low, then we're going to want our stop loss right below this area, because if price comes back down here, it's going to create a lower low, and we're not going to want to participate in a up move, in a buy move, if price action goes and creates a lower low. So what you see on higher time frames, you have the same advantage on the lower time frames. So let's go down 15 minutes, and what can we see? What we see is what we saw on the higher time frame, just played out a little bit longer, right? So here's that whole consolidation area where prices found support at the bottom, resistance at the top, and then on the 15-minute time frame, price finally broke out right here. Price broke out right here, pushed up. Price pushed all the way up to here. We weren't buying the breakout. We were waiting for the retest to come back. Price came back. And then what happens, ladies and gentlemen? We know we're in an uptrend. We start stalling right here above this previous resistance area. This is your key to get in. If you're in a buy and you start seeing price create a higher high than here, this could potentially be your key to stay in the trade because price has created a higher high. However, price came down, created an equal low, came back up and created an equal high. At this point, as a trader, you can make the decision to A, exit your trade because of potential double top and take the profits that you have, or understand that price could come back, but as long as price pulls back and holds this area, your stop loss is never going to get hit, which is exactly what happened. Stop loss never got hit. We were able to take a secondary entry because we have a new high formed over here. Price came back and is creating a higher low. Currently, this is our new high. These would be our higher lows. So now, for us to continue this bullish move, what would you think needs to happen? Go ahead and drop that in the, pause this video and drop it in the comment section, what you think would need to happen on the next move. So, alright, well, if you guys said price was going to push up and need to create a higher high, you're exactly correct. So we would want to see price push up, create a higher high, and then when price did come back to this area of interest, our breakout area, we could look for potential buys to continue this move up. What we see on the higher time frames and how we analyze the market on the higher time frames, we can do on the lower time frames. So for example, here we are on a 5-minute time frame. Let me just bring it to current market movement. So here, okay, if we didn't have, which I erased all the support resistance of previous, but if you have significant resistance like our structure or our support, you're going to want to keep that on your chart. But I just erased it so I can show you guys that you can clearly see the structure on higher time frames as you can on lower time frames. So for example, we're on the 5-minute time frame. Here we notice we have a resistance area. Price came up to this area and started rejecting. Price came up to the area and rejected. Price came up to the area, rejected, up. Okay, you get the point, right? So if price rejects this area now, and if in the future it gets broken and price comes back in the future and finds support above this area, that could be potentially confirmations that we could be looking to buy, right? or when price come back to this area, if we're oversold, if we're out of the Bollinger Band, we could look for the possible buy. Same thing. Price came over here and we got that reaction. Same thing. Price came over here and we got that reaction. Same thing. Price came here, we got the reaction. You guys understand how you can utilize this as binary options traders to potentially take winning trades, as much as you can use this to scalp the market or trade the market on higher time frames. Once you understand market structure and the movement of the market, you will have a much easier understanding of where the market could potentially go, right? We're not going to be 100% right. We anticipate off of human emotions, other human emotions, so we're anticipating based off of previous movement. So again, if it happens in the past, it could happen again in the future. Doesn't mean it's necessarily going to. This is a probability thing. So what I would like you guys to do is go find these areas, mark them up on your own charts, and see how many times you could possibly take trades off of this area. Or what happens when you look on like the hour time frame and you see a break and retest, okay? Break and retest, let's see. We have a break of this resistance area. Price broke up strong, came back within this region, and we started getting rejection, 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 and then we took off. And we took off for an 18% increase. Ladies and gentlemen, an 18% increase is massive growth. And on a leveraged trade, like on a Forex broker, I can only imagine what that would be, guys. But it's not about hitting a home run on one trade or one entry. It's about consistently being profitable, consistently taking the setups you see, trade with the trend, and not against it. And once you notice the trend starts to bend in the end, hold off until you get that new high or maybe a lower low. So that way you know, okay, market's changing direction and we should be anticipating this or we should be anticipating that, right? But with that said, ladies and gentlemen, we are going to continue to get in to chart markups. We're going to continue to find entries, but I want to keep this video short and sweet. Get this guys out to you so you guys can start marking up your charts, start finding support areas, start finding resistance areas, start finding break of structure where price comes back and retest, find support above it. Mark this up, whether it be on the 5-minute, the 15-minute, hour, or the daily. Mark it up and share it with me. Drop it in the chat comment section, or please feel free to join the Telegram, my free Telegram chat. Drop in trade ideas and consistent value, daily inspiration and motivation to help us all become better traders and continue to be profitable in the financial markets. With that said, this is Chris German, aka the Real Binary Master, signing off. I'll see you on the next one. Bye for now.